What's going on, option investors? My name's Henry. If you're new, I'm continuing a series on options because that's my area of expertise when I was working at Goldman Sachs. And in this video, I'm going to explain to you what are leap options, why they are important, how they work, and the benefits, so make sure you stick with me. I'm going to give you 5 plays now that the market has sold off a lot. Before I jump in and flood your pockets with money, make sure you like that smash button for Uncle Henry and subscribe to the dopest YouTube channel. I'm going to start off by explaining buying leap call options, and in the next video, I'll explain selling leap call options. Then I'm going to give you 5 leaps I'm interested in holding the rest of this year that I believe are very high growth potential. These leaps are going to print money. So first of all, an option is an agreement between 2 people. Buying a call option is betting on a stock rising. So a call option is just a contract that allows the buyer to purchase 100 shares of stock at the call option strike price. A leap is the same as buying a regular call option, except it's a further out in terms of its date. Option traders typically put on positions with 30 to 60 or even 90 days until expiration, meaning their stock prediction is usually falling within a 1 to 3 month time frame. But a leap is superior to a short-term option because it gives you many months to work with, and during that time the stock may have at least 1, 2, or even 3 earnings releases. This gives the option investor a lot more time to work with, and leaps greatly magnify returns as opposed to just holding stocks. So let's jump into the first example. We're going to look at Walmart. Now, Walmart has sold off tremendously. They missed earnings. However, I don't think they really deserve to be this low. For missing earnings estimates and slashing its bottom line guidance for the rest of the year, sure, that's a bad thing. However, this stock looks like it's oversold to me. While there's no question that a double-digit drop is disappointing, there's a few reasons why the quarter wasn't as bad as it might seem. Like most American businesses, Walmart is struggling with inflationary and supply chain pressures, and the labor shortage has made it difficult for the company to grow profits. But grocery sales increased by double digits. And have you seen Target, Amazon, and Costco? They're also down a lot, but Walmart is down even more. I mean, this stock was trading for $160. This is a blue chip company, super safe. And from $160, it went down to $119. You can see right here that this yellow area is called a Bollinger Band. It's something that I look for when I trade options. And currently, Walmart has had the biggest volume of selling for the past 6 months. It's way below its Bollinger Band. The RSI is 16. These are all the factors that I teach my students to look out for. So given that Walmart is so cheap right now, let's go into my Robinhood portfolio and let's look at Walmart, okay? I have a lot of options right here on the right-hand side, by the way. A lot of them are at a gain. In fact, most of them are actually trading for a gain. 1,200, 300, 700, 141, 180, 8,000, 4,000. These are all the plays that I'm making in my private Discord community. If you do want to check it out, it's in the description. You get to follow along with all my winning plays. Just like this. I mean, I'm hedging my portfolio right now because, you know, the market is going down, but that doesn't mean that you have to go down with it. All right, let's go to Walmart. All right, here we are looking at the Walmart options. I'm going to go out until probably about a year. So that would be January would be less than a year, and June would be a little bit over a year. So let's go for June 2023. I'm going to look at buying a call option. I'm going to buy a call option that's right around the money. So currently the stock is $120. I'm going to buy the $120 call option right now. And as you will see here, the total cost is $13.35 or $1,335. This is the price that I have to pay, $1,335. However, this is much cheaper than buying 100 shares of Walmart, which would cost $12,000. Instead, you get to control 100 shares of Walmart stock without having to pay the price of buying 100 shares. Instead, it's just a fraction of the cost. In fact, it's about 10% of the total cost. Your break even is $133.35. That's because you have to add the strike price plus the premium that you are paying of $13.35. However, $133 would only be right here. And I think that Walmart can at least go up to $140, maybe even higher than next year if it recovers and we see some reignition in their earnings, which, by the way, we have 4 earnings quarters, so it's not that hard for them to outperform one of the earnings quarters, see some momentum to the upside and regain $140 per share. That would be about a 50% return because $140 would be about a $20 gain. You're paying about $13. You're turning $13 into $20 or $1,300 into $2,000. Not bad for a very safe play on Walmart. Now, the next stock that I want to go over is going to be Apple. Apple's a very interesting play. This stock was trading again for about $178 per share, has since sold off to under $140 per share. It's very interesting because there's a little bit of a fight going on right now. 2 big heavyweights are in the ring right now, brawling. And that's Michael Burry, who is shorting Apple, And then Warren Buffett, who is long Apple, he continues to buy Apple stock, adding to his portfolio. So who's right? Is it Michael Burry or is it Warren Buffett? And I would argue they're both right. Maybe Michael Burry sees a short-term decline. Maybe he got in at $149 right here and he shorted this stock down. However, in the longer term, Warren Buffett could be right. And I think that's most likely the case. Michael Burry is making a short-term play on the bearishness in the market. Warren Buffett is coming in, making a long-term purchase because his holding period is technically forever. Okay, so for Apple, I think it's a really interesting leap option because again, in the short term, it could fall, but in a year, I really think this stock is going to rise because it has 4 quarters of earnings that we're going to capture. We're going to go for the same expiration date as we went for Walmart. But check it out, Apple actually was trading for an average of $162 per share. This is the moving average over the past 50 days. So in the next 365 days, I really think it's reasonable that we get back up to $162 per share if we see a recovery. So let's go look at an Apple call option. Let's see what the return would be. I think it's going to be a lot higher than Walmart. Apple does have a little bit more volatility, and actually am in Apple. I have 100 shares that actually got assigned, and I'm down a little bit of money here, but I'm very excited because I'm not worried at all. I think that Apple is a discount right now, and I'm putting my money where my mouth is. I'm actually throwing in money into what I'm saying that I'm doing, okay? So I think it's really important as a YouTuber for my credibility. I want to make sure that I'm very honest with you guys, showing you my portfolio all the time because I'm in this for the long haul. I really want students to succeed. I want more students under me that I can mentor. I really enjoy this. So Apple buy call option, I'm gonna go for June 16, 2023, which is again about 13 months out. It's a little bit over 1 year, and I'm gonna go for an at the money option. Now I said the stock can go back up to about $162 per share. You will see here that the break even is actually $162. The market is actually expecting Apple to basically go up this far. I mean, it's a very expensive option. So for that reason, this actually looks less attractive than Walmart. But if I go for an in the money option, the 135, the break even is 157, but still, this is not as actually attractive as I thought. However, one thing that this could mean is that Apple could go way higher than $162 per share. In fact, maybe it can go up to $170 per share. Even if it goes up to $170 per share, this call option right here, $135 call option, is going to be in the money by $35. That means you can turn $2,200 into $3,500, which again is going to be about a 50% return. Not bad for Apple. The next stock that I want to cover for a leap option is going to be Tesla. Enough said over here. You already know that I'm a Tesla bull. If you have any thoughts, send them down in the comment section below. I want to know, are you holding Tesla? Do you have any option positions right now? Very curious about that. But anyways, Tesla, I'm a big bull. I have 620 shares. It's about 31% of my portfolio. I am up on this position. I've been averaging into this position more and more every time I have cash available. I also do have some options that I'm up $8,500 on. I'm selling covered calls at the $800 strike price. However, this video is all about leaps. So again, let's go into Tesla. Let's go down into that expiration date of June 16. If I look at the chart right now, Tesla's average or moving average is $925 per share. I honestly wouldn't be surprised because Tesla is a volatile stock to see it go back up to $1,000 per share. I really think that Tesla can end $1,000 this year in 2022, but going out into June of 2023, I think it's a pretty easy bet. So over $1,000 is my price target. If I look at the current call option for Tesla, $720 call option, the break even is $909. So you can make over $10,000 on this position. It's a little bit more expensive. This is definitely a medium account portfolio. Don't worry, my next few plays are going to be small account portfolio trades. But for Tesla, this is an $18,900 trade. You could probably turn 18K into over 30,000. This is a little bit more of a medium account play. Now, the next stock that I want to go over is going to be Affirm. Affirm is a stock that has fallen a lot. I have a lot of relationships in the space with e-commerce giants. I mean, Shopify and Amazon. So I really think Affirm could be a good long-term play due to their relationships. This stock was honestly trading for over $100 per share in the past 6 months. Pretty insane to look at. If I go to the 1-year chart, this stock was trading for over $161. Feel bad for some of the YouTubers that were pushing this stock this high, but I'm gonna start pushing this stock and saying that I'm interested in it at $25 per share when it's basically for an 80% discount. Now, could this stock go up to about $50 per share? I think it's very possible. So let's take a look at Affirm's options. You know, maybe it'll go up to $50 per share. Maybe it'll go up to $40 per share. Either way, the stock looks really discounted from here. I don't think it can go up to $100 in 1 year, but again, anything can happen. Let's take a look at January 2023 LEAP call options. This would be actually less than a year, so some of you guys might say this is not a true LEAP option. That is true. So let's go out to January 19, 2024. This is definitely a LEAP option, very, very long term. And now we're basically capturing 1.5 years. The $30 call option is only $10. This is a $1,000 call option, basically like a lottery ticket. You're paying $1,000 and Affirm could go up to $50. That would be a double on your money. It can go up to $60. That would be a triple on your money. Let's say it goes up to $100. Your break even is $40. If it went up to $100, you would have a $60 profit on your $10. That would be a 6x return in a year and a half. So Affirm might be the most risky play of them all, but also has the highest reward potential to 6x your money. Now, the last stock that I want to cover is going to be NIO. NIO is a stock that I've been watching very closely. In the Discord community, I did get out of the stock at $30. I haven't talked about it on YouTube because I've been bearish from about $30 per share. You know, even at $23, I started becoming very, very bearish on this company. I don't think that it had a lot of upside potential in the short term, but now that it's recovering, I'm really starting to have a passion for NIO again. I do think it's a good company. I just don't think it's the best stock. They do have a few issues. There's a lot of Chinese regulation. There's a lot of issues with delisting. So I was a bit spooked with this stock. I thought that it had a little bit more risk than I was willing to take. And I didn't want my Discord members having too much exposure to the stock. But again, it is recovering. I can't say too many bad things about the company itself. I like its management. I like its business. I like electric vehicles for the future. I do like investing in China. So NIO has a lot of upside potential. Now that it's finally sold off, it looks like a cup and handle pattern forming right now. So let's go into NIO options. I am going to go out for 1 year. I think NIO is going to have 2023 June. Yes, it does. So that's a 1 year LEAP option. Again, this LEAP option right here, I'm very bullish on. I think that this one could do really well. But with NIO, because it's such a volatile stock, because it really depends on so many factors like EV adoption, how China is doing, delisting fears, politics, so many things that I am uncertain about. That is why this stock has so much implied volatility. This stock could really go up to $45 or even $50, right? It can triple. I mean, that's not that hard for NIO. In fact, in 1 year, it went from $50 down to 16. So it can absolutely go from 16 back to 50 if the right factors and environment presents itself. So looking at NIO, if you buy a $20 call option, it's only going for $4. So your break even is 24. If this stock went up to even 28, you would double your money. If it went up to 32, you would triple your money. Now, if it went up to $50 minus 20, that's a $30 worth of profit. You're only spending $4. So you can basically turn $400 into $3,000. Or you can turn $4,000 into $30,000. This is another really higher risk play. However, it has a huge reward. So if you want to follow along with my trades, there is a link in the description if you want to learn how to produce weekly income, create cash flow, or what I call the money machine consistently with my hand selected trades. There is a free call that you can book with an option enrollment specialist on my team. Having a mentor that guides you and teaches you is one of the best investments that you can make in yourself. You can also watch my option playlist right here.